Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the forexpeacearmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit forexpeacearmy.com forum and read my analysis for the week before watching this daily video. So let's create the trading plan for the Monday trading session. We will discuss what patterns we have to watch, to observe, and what levels we should be focused on. There are a lot of nuances on the lower time frames, but let's start as usual from the daily time frame. Well, I will not speak a lot about the stretch pattern since I have said much in the previous analysis, and I have posted the significant and extended description of the stretch pattern in current weekly thread, so you could read a lot about this pattern. I just want to point that we will get lucky if market will show the real retracement right to the theoretical target of stretch pattern that stands around the monthly pivot point and daily confluence resistance. That will be perfect if market will show this pullback right to this area around 133.50, 133.70 area probably. This will be a nice bounce if it will be triggered by the current stretch pattern. Now market has accomplished all targets on the daily time frame. It has accomplished this ABCD pattern. As you can see, market has touched it. It stands now at monthly pivot support 1, and you can see that it's significant on the daily oversold. So if market is ready to the bounce, it should not show any further downward splashes, spikes, because all targets have been hit, and the retracement should follow if market is really intends to show it. If not, if market will take out this low and continue to move down, then probably we should forget about this potential pullback. Market could just creep with the oversold condition to the downside. That also sometimes happens. That is one of the moments why stretch pattern calls tricky, because this is the contour trend and directional pattern that was invented by Judnap. Although, as I said on Friday, when you deal with the stretch, it's better to have as lot of insurance as you can get. I speak about the potential patterns that could be on your side and could justify your entry on the long side of the market. Here we do not have any. One thing that we have is this highway pattern that tells and hints on the indecision condition, but by itself it neither bullish nor bearish. All will depend on the direction of the breakout of the high or low of this pattern. So if market will take it out of this high, then probably we could get on the further upward continuation. If not, if market will take it out this low, so that's obvious that market will probably continue to move down. And take a look at these two candles. That could be the part of the morning star pattern that could be formed right on Monday. So that I have drawn this bullish candle and point this question signs, because that really could be the triggering pattern of the potential pullback, and that could be the morning star. That is just an assumption, but I do not see any other patterns right now, so on the daily time frame. Since all price action currently is bearish and weekly time frame is bearish, and in the perspective after this pullback, when this retracement will finish, the next target will be 130. You could read about why 130 is the target on the weekly time frame, but on the daily time frame that is 1618 extension of this ABCD pattern, and that is also the target of this some curiously looking, some goofy head and shoulders. If you could treat this price action as the head and shoulders, then its target as well stands approximately around 130 area, slightly lower than 130. So, but that is a bit extended. That is the some events that could fall after the retracement. Now our primary task and our primary attention should be linked with this potential pullback on the intraday charts. So as a conclusion, those of you who trade on the daily time frame, on the higher time frames, should do nothing. You should just sit on your hands and wait when the market will end with this pullback, because taking the short position right in the significant support, it's not very reasonable. For others who trade on the intraday charts, on the hourly time frame, on the 4-hour time frame, Well, you could think about taking the long positions because currently context is not as bad as it could be. So maybe it's worth it to look at it. Besides, the risk of that trade will be relatively small because this low is our invalidation point. So your stops probably will be placed somewhere at some distance below the swing low. Now let's shift to the 4-hour time frame. On the on the 4-hour time frame, all context looks simple at the first glance, but there are some nuances that exist here. First of all, we have the setup for potential double repo buy pattern. And this pattern particularly could be the triggering pattern for entering on the long side of the market. Because this pattern is also could be the one that I like to see. You know that I like to see the second bottom of the double repo slightly lower than the first bottom. Why it's important? Because as you can see, that moment trend was bearish. And those traders who trade on the breakouts probably have taken the position on the short side of the market. But at the same moment they were trapped in the wrong position by the wash and rinse. So this wash and rinse is very significant. Why? Because first of all, market by this action has accomplished all targets. Recall that on Friday we have discussed some targets on the 4-hour time frame as well. That was the 1618 extension of the initial ABCD pattern and 127 extension of the most recent ABCD pattern. And market has touched both of them by this action. By that swing down, market has grabbed the stops that have been placed, those who entered right at the moment of the completion of these patterns. And market simultaneously has trapped those who entered at the breakout, as I said. So since all targets are hit and all stops are grabbed, market has no reasons to show any new lows except maybe the possible continuation of to the downside. That's the our risk. So we should not see any wash and rinses, any spikes or something of that kind, because there are nothing objects right now below the current low. So where it's just not interesting to the market, to the price action, to move lower just for that purpose. Only if market is really intends to continue move lower and if we will not get any pullback at all. That's why this low is significant, and that's why this low is our invalidation point. Now, those people who are trapped now in the wrong position, where they place their stops? Probably somewhere above the previous swing high. That's very common. But this high, that is the second nuance by the way, this high is the top of the daily highway pattern. Since this pattern indicates indecision and a major price action develops after the breakout either top or bottom of this pattern, these traders have placed their stops at the most wrong place at all. Because right after breakout of this pattern, traders will start to enter long, since market will take out the high of the high wave pattern, and that will indicate the end of the indecision and possible acceleration to the upside. Those stops will add fuel, since by these stops they will buy and close the short positions. That will add fuel to the further upward action. That's why it's very interesting situation from the market mechanics, and it's really interesting to watch over it within the Monday on the intraday charts how it will develops. So that's the first pattern that you could stick with, particularly with the double repo buy. We have no confirmation yet, so we need the close of the market above this 3x3 moving average. That is green line. Okay, but that's the potential for first pattern that I would like to discuss with you. Also take a look, that trend has turned bullish here already. Now let's shift to the 30-minute chart. There are two patterns more we have here. First of all, pay attention to the bullish divergence. You know that I do not like to rely on the divergences much, but it should be a different approach to the divergence. When the divergence is forming right at the significant daily support and oversold, that is worth the divergence of attention. And now we have such kind of the divergence. That's significant. It just confirms the market housing to the downside and confirms the existence of the support. That's significant. Second pattern, it could be the double bottom. That's very typical for the double bottom when the second bottom creates the wash and rinse of the previous bottom and returns right above it, clearing stops right below the first value and returns right back. That's very common. If this will be indeed the double bottom and we will measure the classical target of it, so that is the distance between the low till the neckline counted in the direction of the potential breakout, we get, take a look, the same level 133.47. That is slightly lower than the confluence resistance on the daily. That's the target of the stretch pattern as well. Another small pattern, so we have the compounding of the patterns right here, is the reverse head and shoulders bottom to the right, and it's the part of the second bottom of the pattern. The target of this head and shoulders is the neckline. So if you count the distance between the head to the neckline, count it to the upside, you'll get the market should lead us right to the neckline. That gives you a lot of opportunities how to enter this trade. First, you could try to stick with the double ripple buy on the 4-hour time frame. Second, you could stick with this double bottom. If you have the lack of assets or you would like to take the greater position, you could try to stick with this head and shoulders, with placing stop somewhere below the right shoulder, for instance. That also is possible. But I just want to remind you that our major point to watch for is this low. That is our invalidation point, and perfectly if you will place stop somewhere below it, at some distance below this low, that will be a correct decision. Well, that's all that I would like to discuss with you with this research. As you can see, situation is very interesting, and market now is really forming different patterns that give us a hint on the potential pullback. The target of this pullback, if we will like, it will be around 133.50, 133.40. But as I said in the thread, the stretch pattern is rather tricky, so maybe market could show just some small move. We do not know it currently, but anyway, at least at the current moment, it looks not bad to try to take the long position on the some pullback on the daily time frame.